Hi everyone, welcome back to Cheddar Movers. We're here on the floor of the New York Stock Exchange markets, redeeming themselves from a disastrous December in 2018 with the S&P 500 on track for its fourth straight week of gains. And with us now to discuss.
I think we're gonna. I think we're gonna talk about.
Yeah, let's switch gears here.
Yes, let's talk about Tusk Venture Partners, which considers it one part venture capital and one part political advisory, raising $70 million. Right?
That's right.
Jordan Knopf is the managing partner at Tusk Venture Partners with us here to talk about how your firm uses political expertise to help guide early stage startups through these regulatory hurdles. A pretty tricky time right now, Jordan.
Yeah, definitely. I think tricky time now, but
Yeah.
also tricky time going back to whenever we first started 4 years ago, raising our first fund, when really headlines weren't being dominated by regulatory problems especially with regards to tech companies. It was really kind of Uber, and that was about it. So since then, we've really seen our thesis start working, and that really stems from the ability for companies that take regulatory scrutiny and really embrace that part of and lean into kind of the regulatory hurdles that they may face, take them seriously and proactively approach local governments can really create a lot of value.
What companies have you traditionally gone after, and this investment strategy that you've deployed in the past, will that change at all for the second fund?
So it will not change. So our second fund is about twice the size of our first. The reason why we wanted to raise that dollar amount is just because we wanted to keep the investment strategy the same. The first fund was kind of the who's who of the last 2 years of breakout companies. So companies that include Bird, Lemonade, an insurance technology company, and Roman, a direct-to-consumer digital health company.
I don't know if you were watching the debates last night, but Amazon came up quite a number of times.
It does.
I mean, what goes through your mind when you see, these political candidates? They're gonna, if they don't make it to the White House, they're gonna go back to Congress and write these laws. What goes through your head?
So a lot of the regulatory hurdles that we're focused on are actually at the state and the local level, and so some of that really isn't as pertinent. And given the early stage that our focus, the fund is really focused on investing in companies at the earliest stage of seed or Series A that are operating in highly regulated markets or creating new verticals altogether.
Right. Well, we are seeing the states take a little bit more of an aggressive approach, suing, let's say, T-Mobile and Sprint over their merger, going after Juul, state attorney generals. So what is the message that you want to send to these individual states?
Well, I think that really, when it comes down to certain companies like Juul that you just mentioned, those are companies that they're not going to fit in our mandate because it's just not something that we believe in. And really what we're looking for are companies that are really have the ability to really transform the technology ecosystem and create new verticals altogether. And so I think that just by taking a proactive approach and being the good actor, you can really get in front of a lot of these political and regulatory hurdles that some of these other companies are facing now.
When you think about all of the regulation, though, in that regard, does that steer you away from investing in certain companies?
That's actually where we lean into them. So it's being the only fund that sits at that nexus of technology, politics, and regulation. We feel that a core part of our thesis is that these regulated industries are really starved for innovation, and that's where you can create some of these really transformative outcomes. So that's where we're looking to go straight after. That's what differentiates us, and that's, I think, what's been the key to success so far.
Uber was one of those cases as well, where they're experiencing more regulation that could be a headwind for them. How do you kind of reassess after you've already made an investment, and where do you kind of assess the right spot to take those chances, to take those risks?
It's a great question. So what we're looking to do is get involved with the company before the cease and desist comes into play.
Sure.
Really help them think about how they're going to land and expand, grow their market, and take the right approach to proactively mitigate those risks. We stay involved throughout the company's life cycle. We're obviously much more important at the earlier stages of the company. When with Bird, for example, we invested in what has been, dominated headlines over the last 2 years. There were five people and 60 scooters that were in Santa Monica. That was it. And successfully helping them roll out in 100 markets, across the United States since then. With Lemonade, a good example is, they weren't able to launch until we helped them get insurance carrier license in New York and then 18 subsequent states. and with Roman really helping protect what they're doing so that they can leverage telemedicine to really drive value to the healthcare system going forward.
When you're trying to sign up some of these companies into your portfolio, after now raising this fund, is that sort of the thing that you offer and say, like, we're different because we can provide this guidance and these relationships that no other partner investor can provide?
That's 100% right. So that is exactly what our pitch is. It's one that resonates really well with founders. That being the only fund that can provide these platform services is critical, and is something that really makes our dollars greener than the next venture funds.
Yes. Well, it's been so cool to talk to you. I'm sure we're going to have you on again because there's a lot to talk about in this space. Jordan, thank you so much for being on with us today.
Thank you for having me.
Jordan Knopf is the managing partner at Tusk Venture Partners.